Welcome, everybody. This is an awesome training that we have today. I know so many of you have been really excited for this particular training to come to fruition. We are so lucky to have Angela Sticka-Snyder, the taxonista, join us for today's training. Hello, Angela. Thanks for being with us.
Hey, thank you so much for having me because, I just love talking about this stuff. So we are going to have fun. Can you believe we'll actually have fun talking about taxes?
Yes, we'll be tax nerds together. It's incredible.
Yeah.
And so I see everyone is starting to pour in. It's so wonderful to have you. Just like we normally do on these trainings, let's do a quick tech check. Make sure that you can see us and hear us okay. On this side of your screen, you should see a chat bar. Go ahead and type in your name, where you're joining us from, and just let us know, yes, I can see you. Yes, I can hear you. So we can make sure that everything is nice and clean and crisp going forward. Thank you so much, Hannah. This is great. Oh, it's so wonderful to have you, Robert, May, Rachel, Paul, Keith, Rich. Oh, thank you guys so much. I know that we have our clients joining us from probably all 50 states. We even have some clients around the world that are joining us from Central and South America. Whoa, all right. Yeah, they are flooding in now. Hey, Eric and Gary and John and Rebecca from Honolulu. Thanks so much for joining us, Rebecca, and Richard and Paul from Philly and Jim from Texas. It is so awesome to have you all with us. So I think you can probably see us, you can hear us, you successfully answered the question, your name, and where you're joining us from. So today, what we really want to dig into is avoiding expensive business mistakes. So you're probably here because you're a small business owner, you're an entrepreneur, and you have a solo 401k plan. We all know that a prerequisite to have a solo 401k is to be a small business owner. And it's all very sexy and exciting to talk about investing in real estate and Bitcoin and all this stuff. But it's really important to do the nuts and bolts to make sure that your business is flowing successfully, that you're capturing all of the different tax advantages that you can, in addition to just the solo 401k, and really that your business is humming along smoothly. That's your profit generator, so that you have the ability to make those big, healthy contributions to the solo 401k. So before we get started, Angela, I have to know, you're an enrolled agent. Not all enrolled agents are interested in working with small business owners. Some of us have unique challenges, in running our own small business. You know about the solo 401k. A lot of our clients kind of call you their secret weapon because you know all about this stuff. What got you interested in wanting to work with small business owners?
Well, I have always known what I wanted to do. So I'm that little kid that would inventory my Halloween candy and create these little tally sheets. And I would sell things with kids in the neighborhood or always have some little small business going. To me, it was always about the numbers. So I always knew I wanted to be an accountant. And then once I got done with my bachelor's, I knew that tax, I didn't want to be a generalist. I wanted to be really tight in to certain areas. And so I got my master's degree in taxation, because I don't believe that things are black and white. I think there's a really big pink area in there. Some people call it gray, but that's not quite attractive enough. So there's a really big pink area in there. And as long as you can stay pink without going black is what I really like to do with clients. So I don't know, I guess I just always love doing this. That to me, job and my career and everything else that I have created here has never been work. I like getting in there and seeing what people have, what they don't have, where there's holes, even in areas where we don't specifically work in tax, but I know that you're missing something, or you need to talk to this person or talk to, solo 401k, things like that are really important. So I really consider myself and our firm a really big connector on other professionals that you need in your business to make you successful. So
That's
that's a
really
long answer to that.
No, that's awesome. I really appreciate that. And I know that there's going to be a bunch of solo 401k account holders that are nodding their heads because one of the things that we often share with account holders is it's really valuable to build your team. As a business owner, you want to make sure you have your team of professionals that are behind you, that
Yes.
understand what you're trying to accomplish, that are there to help you put those pieces in place. So I think that that's really important, and I think that that's really valuable. So we really appreciate that, and it's just so awesome to see your face. I mean, so many of us know you as the Taxonista for years, and now to get to have you with us is awesome. And I know, Angela, you have prepared a presentation for us to take us through some of these most expensive business mistakes to avoid. Whenever you're ready, go ahead and share your screen, and then you can take it away. And our brains are open and ready to receive.
Okay, and what about how long? Because I can either be my East Coast fast talker, or I can go slow. I can go
So
slow.
we've got an hour. We've got an hour set aside for this. So take all the time that you need, guys. We will also be taking some questions at the end of today's presentation. If you have specific questions about your personal tax situation, we'll make sure that there's a way for you to contact Angela at the end of today's presentation as well. So go ahead, take it away, Angela.
All right, thanks, guys. So I'm not going to watch the questions as they come in. Rachel's going to help me with
I
that.
got them.
All right, but here we go. So I like to say that we like to take the monkey off your back so that you can get back to doing what you do best. So we are, let me just tell you a little bit about my firm. I told you about me, but we are a full service firm. And I'm shocked always how many small to medium sized accounting firms aren't full service. They either do bookkeeping or they do tax returns, but they don't do both. So we do everything from helping you decide how to form your business, to setting up your books, doing payroll, sales tax, international in some degrees, tax planning, tax preparation, audit issues, all of those things that encompass each other. The only things we don't do, and I don't really like when other professionals do this, is I don't sell products. So if I recommend somebody to you, I'm not getting compensated for that. So if I say, hey, I really think you should maybe look at your insurance, or hey, I really think maybe you should, look into a 401k. Those are recommendations I'm giving you that I have no financial interest in at all. I find that really important to mention because accountants are starting to deviate and grow their practice into other areas. So keep that in mind. Okay. Now, let me see here. It didn't go to the next screen. There we go. A little bit about me. I did start off like everybody else, working for somebody first. I went through, because I told you I knew I wanted to be an accountant. I went ahead and got my bachelor's degree in 3 years at the age of 19. And then I went immediately into my master's degree and got that at the age of 21. I worked for public accounting firms and then for other large firms where I was a controller. I did have a top secret clearance, so at least, there's nothing too nefarious in my background. And I really love working with small businesses. Small business is a really big question, right? Really, like, what is a small business? The kind of small businesses that we work with are anywhere from, super micro small, gross of 100K to 10 million. So it's a big range. Most of them are in the, I would say, 750 to 5 million range, but typically that's the kind of business we work with, but we work with those on higher and lower. And a little bit about me. I'm not your typical accountant. I really like getting out there. So I have spoken over at NASDAQ. I did speak at the Harvard Club of Boston, and Harvard Club of Boston. And then I just love getting out there and seeing people. So, and I had the privilege of meeting President Carter, which I don't know how long he'll be around, much longer, but I did. So I like getting out there and meeting other business owners and successful people because they got there, they came from, for instance, Martha Stewart. I don't know if I have a picture up here. Yeah, I do, Martha Stewart. She started off on PBS. And any chance I get to meet another business owner, I want to suck as successful business owner. I want to suck as much information as I can get from them because they got there with a lot of hard work. And that's one thing that they all said. So I usually say, tell me a little bit about yourself, but I am assuming you guys are all business owners. And since this is not an open dialogue, I'm going to go from there. There's tax time. People get really overwhelmed. And so I always tell people a good tip is to keep it simple. So you just need to, or KISS, you want to keep everything, okay? No receipt, no documentation, no deduction if you're audited, okay? I'm going to go into that more later. Identify what it's for. If you can't tell by looking at it what it is, it's got all those codes and stuff, then please write down something so you can know what it is for later. Sort them by category. It makes it a lot easier to sum up things. And then you need to make sure you save it for the IRS, okay? Now, business deductions versus tax deductions. This is a big mistake people make, okay? Because, taking a whole crew to a baseball game and buying all the hot dogs and beer and everything, that used to be somewhat deductible. It is a business deduction. Let's say you're taking a bunch of clients or something, but the ball game is no longer a tax deduction. Okay, so it's really important to make sure that you understand the difference. And if you're working with an accountant, it might be a good idea to maybe isolate the items that are a business deduction, not a tax deduction. I consider those, I sometimes will put them what's called below the line. If you're a smaller business, it works great down there because that way you can look at what your taxable versus your book income is. It's not always possible, but it's an option. Now, tax deductions, depending upon what you are, but we see a lot in mileage, travel, meals, home office, and professional development. It really depends upon your industry, but I mention these a lot because in mileage, a lot of people don't think about mileage. They think it doesn't really matter, but it's always in that, lately it's always been in the upper 50s cents per mile. And so for instance, let's say you're my client and you drive to come see me. That's deductible. You go to the office supply store, that's deductible. You drive to a client, and there's lots of really great apps out there. So mileage is my biggest one I wanted to mention on this. Home office, how many people think home office is a red flag? Yep, I see some of your hands up, right? It's not. It's only a red flag if you do it wrong, okay? And I've seen some wrong. Or if you and your spouse try and do one in the same room, okay? And double dip. But it's a really great deduction that's there for you. And if you're ultra conservative, you can always do the standard home office. It's small, but it's still an option. So that's a great option. Professional development. This is an area that's a little tricky. I'm sure everybody's heard about business coaches and their programs and things like that. That has really been on the uptick. And you need to make sure when you're looking at stuff like that, that you're not looking to go into a new profession. Because if you hire a business coach to go into a new profession, there's some tricky things there, and that's not usually deductible. So, all right, the auto deduction, actuals versus mileage. I totally believe that mileage is much easier because even if you take actuals, you still need the mileage amount between business and personal to apply that to your actuals. So if you, it really depends, but I strongly recommend the mileage rate. Some people will buy a new vehicle, put it on their business, and then take the full depreciations, section 179 or bonus depreciation. That does work. However, number one, make sure that you've got commercial insurance, because if that vehicle is owned by your business and you have your personal vehicle insurance and you get into an accident, the insurance company can and does have the right to decline covering that accident. So there's lots of tricky things to consider there. Just lots of tricky things to consider there. All right, travel, meals, entertainment. So I'm sure everybody remembers when entertainment was deductible, because the first time it changed was in 18. So in my baseball game example, in fact, the Treasury regulations just came out with really detailed guidance that if anybody that's super interested in this, I'd be happy to forward the Treasury regulation to you. If you ever have insomnia, you can just read it at night. It's perfect. But it gives you great examples, okay? So, but one caveat that is sort of slipped through is a company party. So a company party with your staff and team members is 100% deductible. All right. So It just has to include everybody, and it can't exclude anyone. So you couldn't have all the executives and stuff. But there we go. But it's just the company party. The home office deduction. Like I said, it's definitely great. Keep it reasonable. Anything more than 10% is a red flag. So if you do more than 10%, make sure you've got pictures, make sure you've got floor plan, anything like that.
That's
Because
more than 10% of square footage, right?
yes, thank you. 10% of square footage. So let's say you've got a 3,000 square foot house, and if your office square footage is not, it is more than 300, then just make sure to prepare to support it. We do have a client that's up in Massachusetts, and she gave us her home office, and it was like in the 30%. And I'm like, oh my gosh. But she sells on Amazon. All right. So she sells on Amazon, and it houses the inventory. She doesn't still live at the residence. So luckily we told her to go in and take a video and pictures and throw it into her tax file. So that's what she did. All right. So it's just a really good deduction, because also you can throw everything into the bucket. So for instance, if you've got termites, bugs, a housekeeper, pool man, yard man, anything like that at all, you can put in there, because you're only getting this percentage. So you want to make sure that that bucket is really big. Categories. These are the main categories, because people always say, is this deductible? Is that deductible? In most instances, everything you incur, and again, I didn't say in all, I said in most instances, everything you incur for your business to operate, it's deductible. All right. This is a great list that you can always refer back to, just for things to jog your memory, and then also different categories. It's really important not to get multiple categories, so that your chart of accounts or the numbers you give to your accountant are, you've got like 50 different categories. No, try and condense them down. All right. Because the goal is to get your numbers to fit in the predetermined cells on the tax return, because it's better to go into those predetermined cells, because if it doesn't, then it's separately listed on a support page, and the little bots can look for keywords, and we don't know what words they tend to look for. For instance, let's say you're a client that you're a business owner that gives gifts to their clients, right? And maybe you don't follow that $25 per person per year rule. Who does? It hasn't been indexed in decades. Okay. And you put on your tax return under other deductions, and you write out gifts, and then there's a large amount there. That definitely would increase risks on your return. Okay, so take a snapshot of this. And also, I believe she is recording the video, but this is a great page to look back to. If anybody has any questions.
We like to say, be interesting to everyone in your life and boring to the IRS. And I think that's exactly what you're saying here, right? The IRS, they should just fall asleep if they're looking at your tax return, because they've seen it a million times before. Don't do anything that's going to catch their eye.
Right, because okay, so for instance, I've seen tax returns where they'll list out everything in the other, but all of those items had buckets on the face of the return. So it just is not, it's not good. It's not good. It's not good. You want to be plain Jane or plain Joe, okay, to the IRS for sure. Definitely.
Okay.
Now, to support your deduction, this is a huge, huge trap. You've got to be careful. If you keep a great online calendar, okay, on my calendar, it tells me exactly where I am, where I was, an address and everything, okay? And I've got receipts that have all that. So, and I save my receipts. So you can match up my receipts with who I was with on that day. All right, and the receipts will have the location, and my purpose is usually always the same. Probably yourself as well, if you're in a consistent type of business. But there is the rule that no receipt, no deduction. Your credit card statement will not support you in an audit. Okay, so if you've been thinking, and just saving your credit card statements, that's not going to help. All right. Just because it says Office Max does not mean that it wasn't Jack and Jill's crayons and some backpacks. Okay. You have to be able to see the detail. Now, there are some exclusions, of course, right? And it's usually on the de minimis rule. However, if I tell clients that, then they'll forget the amount and then they won't save the receipts. So I just tell you to save it all because even myself, I don't have an opportunity to save it all because I forget sometimes, right? Or it gets lost, or on those thermal papers, it fades in the sun. And whether there's a fire or a theft or loss, the IRS does not care. So you get no leniency for anything like that. All right, guys. So make sure you save it. The purpose, usually you would know what it's for. The location's usually on there, the date's on there too. So if you don't have a good calendar, then you might need to keep track of some of this stuff a little bit more detailed. Now, I already told you this, keep the receipt. Now, when you keep your receipt, how do you keep it? We utilize what's called HubDoc. And it's a receipt capture app on your phone. You simply can just take a picture and it goes into their system. And then if you have an accounting package, depending upon which one you have, you can connect it that way. I just like to save it. Some people are really organized. There's another word you could call them too, but I won't. And they will attach that receipt with each transaction, okay? And that's wonderful. It is great. I don't think it's necessary. I mean, I'll do it for you if that's what you like, but it's not necessary. If you're audited, they don't usually say, oh, I want all the receipts. They'll say, oh, I'd like to see everything, or they'll spot check. And that's when we go back in and find them. So there's Receipt Bank, HubDoc. Another thing you can do is just take a picture of it, throw it in a folder on your phone. Just make sure you save it. That's all. Identifying what it's for, a business purpose, things like that. Now, you know what? Does she have the right one up? She does not. I have got to get her to get me the other one because there is another page in here that I wanted to show you guys. As far as getting it, let me tell her to. I'm going to step away for just a second because I have got to get her right out the door.
Sure, no problem. And guys, I see that you already have some questions coming in. This is awesome. We'll make sure that when we have the replay posted on the Solo 401k network, which you can always access, it's free, it's open to everyone at solo401k.net. When we put the replay up, we'll also collect the names of some of these apps so that we can link them underneath as resources for you guys. That way you'll have the history of which apps specifically Angela's referencing here.
Okay, let me get this. Guys, sorry about that. I had created an extra. It's okay, I got it. Here we go.
And we appreciate you
while I'm pulling it up.
We appreciate you grabbing the slides. The more info we can get on this stuff, the better, Angela. So we really appreciate that.
Oh, absolutely.
And I think part of what we're learning here is the IRS really either randomly or all at once, they care about that attention to detail. And that's why you're talking about making sure you're saving these receipts so that you're really documenting, you have the proof that these are justifiable tax deductions. Because if the IRS doesn't get their money in the form of your taxes, they want you to pretty much prove it, or at least be ready to prove it if needed.
Absolutely. And I've seen it happen in real life. Okay. So I have seen it happen where the IRS will not allow a deduction. You know what? That's okay. I am going to go ahead and just keep going. So that is fine. I'm going to go ahead and just represent it back up.
Sure.
Okay. And I talk super fast from my East Coast side. There we go.
That's okay. I'm sure like the New Yorkers on the webinar are like totally keeping up with you. And then the Californians and the Hawaiians are like, hey, slow down, man. I grew up in LA, so I'm kind of on the like, hey, slow down, man side. But, you know, it's cool. We're rolling with you. It's cool.
All right, and I am just going to come up here and reshare. Here we go. I'm just going to go through them because it's in my book, but I'm going to go ahead and go through them and pull up my present.
Okay, sure. Go for it.
So here we go. Okay. All right, so some of the most expensive business mistakes that I like to talk to people about once this continues to come up is when you first start off, whether you first start off or you have been in business doing this for quite a while, is to make sure that you come up with a bookkeeping accounting system, even if it is Excel, which I don't really recommend, but even if it is, it's something, and you need to make sure to, I'm just going to go on to the deductions page. Okay, is making sure you properly form your business. A lot of people have a tendency to just they'll do one of two things. They won't create an LLC, and they just go off in business and they don't create business accounts for with their bank, and then things just get all commingled. All right. Another thing they'll do is they'll create the wrong type of entity. They'll create a C corp for themselves. Or, gosh, yeah, we've had lots of people do that. It's, try and maybe do some research or ask an accountant first. Don't just think you know and say, oh, I need to create a PLLC, or, oh, I need to create an LLC. Do some looking, because it can be costly. Because sometimes if you get into something, like the people that got into a C Corp, it was just a disaster. We have 2 clients that did that. So, really take a good hard look at how you're forming your business, okay? And commingling. This one's huge. And this one will open up a business audit if you're audited personally, and vice versa. So for instance, what I mean by commingling is if you've got a bank account or a credit card and you are living, let's say you use it for business, but you're using your personal items out of there as well. So you're getting your hair done, you're paying your mortgage, things like that. That is not good. It doesn't technically have to be a business card or a business account, but it does need to have the expenses segregated. All right, so if you, for instance, what I usually suggest is, especially when you're starting off, you may not be able to get a card in your business name, but get a card and then just write biz on one and personal on the other. But definitely keep the expenses segregated. That is a huge no-no. About getting the bookkeeping system or a bookkeeper, this will definitely save you money, because you'll either be not keeping track of things that are deductible, or if you don't have it in a bookkeeping system, then there's no checks and balances. So more than likely, there are expenses that are slipping through the cracks. Also, if you don't have guidance as your business is starting to grow, then you're not going to have anybody there letting you know about things like, are you carrying enough workers' compensation? Are you carrying it on your contractors? Do you have a retirement plan set up? Which ones are good for you? All that kind of stuff. So, that kind of advice is really invaluable. That's something to take a look at. Even if you just hire somebody for consulting rather than on a monthly basis. It's just any professional that's all they do. They definitely have guidance, and you don't know what you don't know. So save your support for your deduction. This one's huge. I went over this. Your receipts, if you get invoices that are emailed to you, all right? If you get invoices that are emailed to you, then what you can do is just, like I said, create a folder on your desktop and put them there, or you can take pictures of them. You can set up actually an email address just for your receipts. Jane Doe Receipts at Gmail. Jack Smith at Jack Smith Receipts at Gmail, and you can just shoot them all over there. And the only time you ever need them is if you're audited. Insurance, make sure you are properly covered. I have seen this taking people down. So you've got things like workers' comp insurance, buy-sell agreements with insurance to buy out if you're in a business with somebody else, general liability insurance. errors and omissions. Again, I do not sell insurance, but there are so many times when I see business owners that aren't adequately covered, and one bad claim and poof, they can be out of business. So workers' comp's probably my biggest one that I see. Workers' comp is the biggest one. Classifying helpers and workers, big issue and mistake that can happen with businesses. Because of course, what do you want to do? You want to hire them as a contractor. You want to pay them as a 1099. Why? Because it's easier. You don't have to do payroll. You don't have to withhold their taxes. It's just so much easier, right? Problem is that if they are truly employees, and there are a bunch of, I can't remember how many rules there are, but there's a lot with the IRS that you can go through to see if that person is going to be classified as an employee or a contractor. Just top level basic is if you control what they're doing, their working hours, they come to you, they don't work for anybody else, then they're typically an employee. Let's say they have, they go and they do graphic design work for multiple people, and you just give them an assignment. That's probably a contractor, but that's an area that is really being hit heavy. So just think of it this way. We had a client one time that didn't listen to our advice. They kept their worker as a contract worker. It didn't end well between the two of them, the worker and our client, and the worker went down to unemployment to claim unemployment. And she was told, that company doesn't have employees. They did a whole investigation, and she had a lot of back tax to do. So, unfortunately, you learn these kinds of tips when people have errors. So you only lead a horse to water, can't make him drink. In addition, with the classifying helpers and workers, before you pay anybody, you need to make sure you've got a W-9 from them if they're a contractor, or their full employment paperwork completed if they're an employee. That's another big area. These are areas that are expensive business mistakes beyond taxes. Okay, so let's say you don't, and you pay a business coach $50,000. Okay, and you don't give them a 1099. That's right. You could be subject to the 25% backup withholding on them. I think it's 24% backup withholding. That's a lot. All right. So that's over 10 grand. So, and if you were audited, and then there's penalties on the failure to file 1099s. So, okay, statute of limitations. I wonder how many people are on this call. So, because I'm going to give you some stats here. So statute of limitations is how long the IRS has to come back on you and collect, okay? They have 10 years. They have 10 years from the date of filing, all right? So if you don't file, then the statute of limitations clock never starts, okay? So no matter what, and this happened in the mid 2000s when there was the crash. A lot of people that just lost properties and things like that, they just sort of threw their hands up, didn't file taxes for many years, and then as things started to get better, they came back and filed taxes. Problem with that is their statute of limitations clock never started. What if they started when they were doing foreclosures and maybe bankruptcy? They could have then continued to make really small payments, keep that going, and then at the end of 10 years, those would drop off, okay? Also, let's say, I don't know how many people are here. Let's say there's 25. Could be 250, I'm not sure, okay? But let's say if there's 25 people here listening. Out of that 25, there is at least 2 of you that owe over 100,000 to the IRS, and the other one hasn't filed in over 5 years. So I can't see you through here. When I'm doing a live presentation, I try not to look at people's eyes because usually they're like, oh, I knew you were staring right at me.
The one who doesn't want to make eye contact with you. That's the one.
Right. So it's very common. It is, again, very common for business owners to let years go by. It's a sad truth. All right. And it's shocking how long they can go without filing before the IRS even catches up with them. I mean, they can go a decade or more. And it's sad because you're going to eventually owe. But It's just know you're not alone. Know there's a way out, and whether it be a payment plan, an offer in compromise, just getting you current, there's definitely options. Just whatever you do, don't believe those late night commercials that say if you owe more than $10,000 to the IRS. No, please don't. Even one of my best friends at the time went to them because she was too embarrassed to tell me. They took her money, about $5,000, and they put her on a payment plan, of which we do for about, 10% of that cost. So just know that they're in business.
Which is another expensive mistake. So it's another expensive mistake is overpaying for something where you're not getting the value that's commensurate with it. And wouldn't you also agree, Angela, it's always better to go to the IRS before they come to you?
It is. It is. It doesn't usually happen that way, but
We've had, for example, people that maybe were late with their 5,500 easy filings, or they didn't know they were supposed to, or they restated to us from another provider who didn't tell them they were supposed to be filing. And if we hear from them that they should have been filing when they didn't, the IRS has a whole program that's a penalty relief for late filers. So if you're behind on these things, that's why these tax professionals exist, is to help you get current. And if possible, if you can go to the IRS hat in hand and make amends or try to get current, then that's going to be far better than them discovering you in an audit or a random compliance check.
Because usually, let's say, this was a complex situation, but we had somebody who failed to file some proper foreign accounts for foreign investment accounts.
An FBAR, yeah.
And the penalties on that are really huge. And so we had to refer to a tax attorney. Tax attorney wrote up a beautiful letter. And it was basically saying that I didn't know. It was, I had no idea. I was not willfully trying to do this. I'm getting current and really asking for forgiveness, basically. So yes, you do get a lot further going that route. And one thing to keep in mind is IRS agents, not the IRS itself, because it is a huge government agency, but the agents you deal with are just people with jobs, okay? That's all they are, is people with jobs. So if you are adversarial to them, usually that's what you're going to get back. So whenever I work with an agent for anything, we want to be very friendly. We don't obviously give them things that they don't ask for, but there's no reason not to be helpful and friendly to help get your client through this, because I have always found that the more helpful and just friendly you are, they can realize that, mistakes happen. And ultimately, it's the IRS agent that's going to say, because if you were a real jerk, they could say, nope, sorry. Otherwise saying, listen, they didn't know, they're going to be current now going forward. This isn't going to happen again. It's really important to think of those kinds of things too.
Absolutely.
So, yeah. I just whipped through that, but let me go through one thing. I'm a big do-it-yourselfer, all right? So I get people that like to do things on their own. I do. But there are certain times that are really important to consider, and this really goes for everything, not just taxes. Changes in your personal and business life. You get married, divorced, you're going to retire, you're moving states, your children are starting to go to college, they're going to be students. You start a business, close a business, you're going to buy a rental property, you're going to sell a rental property, you have debt changes or financial changes, and just a second look every few years. So those are the times that are really important when you should relook at a lot of things. If you have like a estate plan or a trust, all of these fall within that too. So it's, and if you're a do-it-yourselfer, then maybe do it yourself for a couple of years, come have somebody else do it, look at it, see what the differences were, see what you missed, see if it's worth going back to amend, and then go ahead and try it again. But that's, that's just sort of my 2 cents on that.
Love it. Awesome.
What kind of questions?
Okay. Yes. Gosh, thank you so much. That is really helpful, Angela. This is just awesome. Yes. Okay. Wait, go back. Because you were talking about how to work with you. Because this is one question that I haven't seen posted yet, but I know that people have. So Do people have to come into the office to work with you, or do you work with clients remotely?
We work with most clients remotely, and COVID just sort of expedited that, right, with everybody else. So, no, I mean, we've got clients all over the country. We've got clients in Canada, Mexico. We've got clients that live in the U.S. and Russia. We do most things via Zoom now or video calls. We have a secure portal so that you can upload things from there. We definitely always look at what's been done and see what has worked for you, what hasn't worked for you, things that you would like to see changes or work differently. Because we don't just shove you into a pigeonhole of, okay, this is the way we handle everybody, because your business might be different.
That's
So
awesome. I
this
appreciate
is just
that.
a little bit of that. Yeah. And you can just look at Taxinista. We're also 1-888-Taxinista. And you can Google Taxinista and my full name, Angela Sticka Snyder, and you can find a bunch of stuff on us.
And we also, guys, at the bottom of the screen here, you'll see that there's a button that says contact the Taxinista. If you click on that button, you can fill out a short form, and it'll just encourage the Taxinista team to reach out to you so that you guys can see what might make sense to do together. We do have some questions here that I want to go through, Angela. So the first question comes from John. Should we save the actual receipt, or will an image of the receipt be sufficient?
The image is fine. So as long as the IRS can see what was purchased, then you're good. So for instance, let's say you've got, I think it's American Express, I'm not sure, but there's one of those credit cards that's expensive each year. We only have like a couple clients that have it, where all of the images of the receipt come on their statement. So if that's the case, then you don't have to save the receipt. Okay, but I would say 95% of statements don't come that way. But correct, once you have the digital image, you don't need the tangible copy.
And then sort of piggybacking on this question with John, a lot of our small business owners here, we pay for various softwares and things online where we're not getting a physical receipt. If there was an audit, would that be a case where we could, log into the online portal and then just download the invoices for the year or whatever time period was in question? Would that be sufficient?
Yes, absolutely, that would. So that's one thing I usually will tell people to tell people to do. And another thing, for those that do a home office, rather than, and medical too, let me mention medical, but for those that do a home office, I strongly recommend that don't save all your monthly statements. Just call your gas, your electric company, your water company, and say, hey, can I get a summary statement of everything for 2019? And then just save that. That works. And same with your AT&T or your T-Mobile or your Zero or whatever. Yeah, definitely.
Or if you're like leasing a computer, you can get your annual statement if that's something that's going to be equipment for your small business, things like that. Okay, that is awesome. Angela, you had mentioned a couple of apps that were valuable for the receipt saving. Will you tell us the names of those couple that you like? We'll include them in the resources.
Yes. Okay, there is a couple of them. I like Receipt Bank and HubDoc. All right. There's actually tons of apps I like, but I do really like those. And for bookkeeping and accounting software, we despise QuickBooks and do not support it for accounting purposes. We utilize either Xero. We don't. We can support you for tax purposes, but for bookkeeping purposes, it's a dinosaur that is a royal pain in the butt. So. If you're using QuickBooks and you would like to try something a little bit more user-friendly, a little bit easier, let me know and I'd be happy to give you a free account to try.
Awesome. Thank you. Next question comes from Tim. How long do I need to keep my tax receipts for? I think, Tim, you probably mean your receipts for tax deductions. How long do you keep those receipts for?
Technically, I would save them for 7 years, depending upon your state that you're in. I'm located in Arizona. Arizona's statute of limitations is 10 years. So let's say you're 8 years in and Arizona audits you. If you don't have the support, you could lose the deductions. So I would say that, it's just up to you, but the federal is 7. However, it's technically infinite if they find chronic errors.
Okay.
So
So
that's why digital is best.
fortunately, we don't have any tax evaders here. They are not allowed to be clients. But so I think that's a good rule to remember, guys, is so 7 years federal and then check your state. That's probably something you can just Google. What's my statute
Yeah.
of limitations for audits for my state? Input your state name. And then what you're saying, Angela, is if the state time period is longer, err on the side of holding on to for the state so that
Yeah.
like you were saying, if even at federal is a 7-year hold, but then Arizona is a 10-year hold, if they come to you in year 8 or 9, just the Arizona doing the audit, then you want to make sure that you have all of the sufficient documents.
Right. Correct.
Perfect. Okay. Awesome. Next, this I think is more of a note from Esther that's really helpful. She says, "I scan receipts in on my phone to a Dropbox folder that has subfolders for each month."
Okay. I'm going to say that's very good, Esther. Okay. That is very good. Give yourself a pat on the back. Okay. That's great. But I'm going to give you one more tip. All right. So you have subfolders for each month. And for looking at your performance of your business and the accounting of your business, then looking at a monthly basis is important because you want to see, hey, how well did I do this past September compared to last year in 2019, right? But if you're audited, they're not going to say, hey, I want to see your September 2019 receipts. They're going to say, I want to see your gas receipts, your meals and entertainment. Okay. And so I would probably save them by category. There's a suggestion there. I would save your receipts by category or vendor.
Okay, that's great. That's a very helpful tip. Thank you. Okay, next question comes from AJ. Is there an amount to give contractors 1099s? I think what AJ is saying is, what's the threshold that above those payments you have to start giving 1099s?
Yes. So it's $600 per year. Okay. Not per transaction, per year. So I still recommend getting a W-9 from somebody. So let's say you hire somebody in January, it's $300. You're like, oh, okay, I don't need a W-9, right? However, what if you hire them again in December and you forget you hired them back in January? So I would just get the W-9. You don't have to give them the 1099 if they don't meet that $600 threshold.
Perfect. Yeah, that's great. And also, you might have contractors that you work with year over year. And so we have a lot of real estate agents and flippers that have one-man shops as their solo 401k business. And so maybe you have a subcontractor that only earns $450 one year. You have the W-9 for them, but you don't need to issue the 1099. And the next year, they do $700 or something, then you would need to issue the 1099 to them in that year.
Let me clarify something because I quickly saw Rebecca ask this quick question. I can answer it really super fast because it's related to this. Yes, if you pay somebody by credit card, then it's the credit card issuer that is issuing the 1099. Okay, this was a recent change a couple years ago. So it's really going to be if you pay for somebody in cash or check. All right, so that clarifies that.
Perfect. That's excellent. Thank you. Okay. Next question comes from Paul. How about gas receipts? Can we just use our credit card statements?
I would assume if you own the vehicles, let's say you have a fleet of vehicles and you own the vehicles, and the business owns the vehicles, then if you have a gas credit card, and like a Texaco card or something like that, then yes. If, however, it's a regular credit card that you're putting gas on, that could also have a big gulp, a big beer and some chips, no, I'd say the receipt. And if it's just your vehicle that you're using and it's not owned by the business, then I wouldn't even waste your time with gas receipts. I would do mileage.
Great. That's a great tip. And guys, as these different questions are coming up, each business is so unique. If you would like to discuss your particular situation with Angela or with her team, there is that button in the bottom of the page that says contact the taxonista. It will take you to just a little contact form where you can put in your name, your email address, your phone number, so that Angela's team can reach out to you. These are highly personalized situations. Everybody's tax return is different. Everybody's business is different. So while we really want to do as much as possible for general best practices, when we're drilling down to the nuts and bolts of your particular situation, one webinar doesn't cut it. Okay, guys. So you want to make sure that you really have a professional that's engaged. Remember, we've talked about this before for all of our 401k account holders. It's having your team. And Angela is like a secret weapon for a lot of our account holders team. So, okay. The next question comes from Rich. It simply says, health insurance. I think maybe what Rich is asking is health insurance considered something that would be able to be deducted?
It is, but it's not. I mean, yes, that's an unusual item also. I don't know how big your business is, but if you're a big business and you're running it through the business, then yes, it is. However, if you are a business owner, it counts as an adjustment to income. So it actually reduces your income and coming up with your taxable income. So yes, it is.
Perfect. Okay, that's great. And thank you, Rich. Yeah, deductibility of health insurance. So, Rich, if you have questions about your specific situation and maybe how to apply this, then we would encourage you to reach out to Taxonista. Okay, question from Charles. Angela, I'm in the process of closing my own C Corp. My accountant has 10,000 shares listed in the balance sheet. Do I have to pay taxes on these shares? Before I'm going to let Angela jump in, Charles, and for everybody, this is not tax or legal or investment advice. Angela is here as a guest speaker of ours. We would strongly recommend, Charles, that you still work with your accountant, or if you would like to work with someone that specializes in small businesses, contact Taxonista. Any of the best practices that she's sharing are not tax advice. And of course, there's going to be other, specifics to your situation, Charles. So, Angela, what are your thoughts just as general best practices on my accountant has 10,000 shares. Do I have to pay taxes on these shares? Closing down the C Corp.
Yep. Unfortunately, I need a lot more information than that because it has nothing to do with the number of shares. It has more to do with the dollars and stuff. So,
okay. So Charles, if you have a question there, then make sure you reach out to Taxonista so that Angela can actually go over your specific situation, find out about business valuation. When is the business closing? What other assets are in the business? What are the liabilities of the business that might offset some of those taxes? Right. These are all the pieces that need to be filled in on a private conversation. So,
yes, okay. Correct. And you know what? I have a full team. So just because, you got to know me and I got you to laugh a little bit, right? See, taxes aren't all that boring. I do have a full team. And I like to put each person with the best person that's there. So it may not be somebody that's as funny as myself, but I assure you, I put you with the person that is the most expert in the area of what you need.
Okay, awesome. So thank you. That's great. Next comes from John, and we've only got a couple more minutes, guys. We're going to get to as many of these questions as we can. And then if you have questions that have not been answered yet, definitely reach out to Angela. She and her team will be happy to go over the specifics of your situation and see what might make sense as far as working together. The next question comes from John. For a section, and again, John, this is, we can't give tax advice here, so we'll try to cover the answer as best we can with best practices. For a Section 179 deduction with bonus depreciation on a new 6,000-pound truck, does it need to be registered in the business name if it's used for both business and personal use?
Okay. Yeah, this is just off the cuff. You need to speak to your own tax person on this.
Not tax advice.
Yeah. Okay. So generally speaking, like I said before about a vehicle, if you're going to put it in the business name, you're going to have to insure it under the business. Okay. That may change your mind when you see the rates. Okay. Because if you don't, think about this. let's say the vehicle is titled in your name, John Doe. Vehicle's titled in John Doe. No, wait, it's titled in ABC code. But John Doe covers the policy. That's just a big risk there.
Yeah, because the business is holding title, but you're doing personal insurance to avoid the high business insurance rates. Okay, good catch.
Yeah, and you know what? Don't, I don't know. I don't know if there's rules on doing 179 or bonus as a fraction. I'd have to check that.
Well,
Most
and
of us
John,
don't have that as a fraction because then you'd be taking a fraction of the 179 and bonus, not the full amount because you're using it for business and personal.
got it. And John, this would definitely be a situation where you would want to speak with Angela or her team or your tax professional on how much time you're using the vehicle in business versus personal so that these fractional deductions can be made appropriately.
Yeah.
Okay. May Air says, what's the name of the bookkeeping app you mentioned? That's Xero, and that's Xero.
Yes.
And Xero
It's
is great.
fabulous. It's great. It's easy to use. It is easy to clean things up if somebody makes a mess, whereas QuickBooks is not. It's you can go to the app marketplace, and there's thousands of apps that can connect to Xero, depending upon what your industry is. It's a really useful app, and cost-wise, they're all basically the same.
Yeah. And that's Xero, guys. It's a good bookkeeping app for 2020 because I mean some bookkeeping apps tend to be really old school, like you were saying before, Angela. They're kind of like a dinosaur. I like Xero. They like to be more on the cutting edge and have phone app capabilities and things like that. So that's great. Okay, next question is from Shankar. Shankar, I can already tell by just eyeballing this question that this is going to be something you're going to want to speak directly with Angela and her team or your tax professional about, but we'll see if there's some general best practices we can tease out here. How much can I pay my kids? They're age 9 and 12 per year for some business work they do for me, like marketing. What's the best way to pay so it's business deductible and the kids also do not pay taxes? Now, before you even jump in, Angela, Shankar, first of all, I think you really need to be able to make a case that a 9-year-old and a 12-year-old are competent when it comes to marketing. Because that would definitely be a potential red flag I would identify here. And I'm not a tax professional, but let's assume that they are like master copywriters or they're web developers and they whip up a new website for you. So we're going to assume a lot of things just to bring the question into context, because I think trying to, say a 9 and a 12-year-old are doing marketing for a business may be a bit of a stretch, but let's assume that they're, amazing web developers and they know how to create a website for you so that we can assume legitimacy of the question. Then I think that the follow-up is, how can you pay your own children, maybe minors, so that it's tax deductible and the kids are also not paying taxes?
Okay, who asked this question? What's her name?
Shankar.
Shankar, and that's a female, right? Shankar?
It's a male.
Yeah, okay, Shankar. All right. First of all, that is fabulous to do that. We have clients do it all the time, and I am not a financial advisor, nor am I giving financial advice. I'm just repeating information that I've heard from financial advisors, okay? But it's fabulous because you might want to check in your state. And the state of Arizona, you can hire them as early as the age of 7.
But how are they justifying that they're actually working for the business? It just doesn't really matter? Or?
Trash cans to empty. We've got shredding to do.
Okay, got it.
They probably know
legitimate work. You're not telling them, you're not saying that your 7-year-old is doing sales calls.
No, but the 7-year-old could be doing things on Facebook and liking things and doing stuff on Instagram and on TikTok. Okay. So this is an area where I would probably try and push it. Now, granted, they're not going to make 20 grand. Okay. But I would say, you know what? I would look at this on the individual situation. So let's say you have a business owner I have a business owner that has just blown it through the roof this year. They're going to net 1.3. They have 4 girls. Because they're netting 1.3 after their payroll, that I could conceivably see paying their kids maybe 10, 15 grand each because of their lifestyle. Okay. Now, let's say they netted 100K. Then I could see maybe doing 2, 3, 5K at the most. But yes, you can pay your children. And the best part about this is you can set them up with a Roth IRA. And they can put that money in. You can file a tax return for them. You can pay them up to 12 grand, 12 and change. You know, it goes up a tiny bit.
12,000 is the cutoff where if you're under 12,000, you don't have to file a tax return. Is that correct?
12,000 in W-2 income. If you have 12,000 in 1099 income, if you have $10 in 1099 income, you have to file a tax return. Okay, so the 12,000 is only relating to like wages. All right. So yeah, they wouldn't have to file a return, but I would file their tax return because you'd want to get it just in there, registered, and then I would also set up a Roth IRA right away. Get that money growing while they're young. Talk to a financial advisor because, you know, so do you guys do those?
Roth IRAs? Yeah, we can set up Roth IRAs. Yeah.
Oh my gosh, then yes, we need to have a talk just about that because this is a great strategy.
Absolutely. And thank you, Tricia. I know Tricia said 7-year-olds can do a lot. You're right. I am speaking from the no child zone. I don't have children yet. So I'm sure that when I do, I'll be having my 7 and 8-year-olds be doing web pages and sales and marketing and things like that. I like what you're actually talking about with Instagram and Facebook and TikTok, because that's something where this younger generation, yeah, they're more competent than we are for a lot of that stuff. So that's a really good point. So Shankar, to go back to your question, what's the best way to pay so that if it's tax deductible? Is probably one question. And so the kids do not pay taxes. That's another question. Of course, you'll want to make sure you're working with your tax professional on that. And then Shankar's follow-up question says, perfect. If I have a solo 401k, can I still do a W-2 for my kids? As long as they are part-time W-2, that's okay. Remember, the disqualifier for a solo 401k is a non-owner employee working full-time W-2. Full-time is defined by the IRS as 1,000 hours or more per year. So if the kids are working a couple hours on the weekends, they're going to be far below that 1,000-hour threshold. They're considered part-time W-2, and then you can pay the kids, have that deduction. The kids can be growing their own nest egg, and you can still retain the solo 401k. So if that's a structure that you want to work with, Shankar, then definitely make sure that you reach out to Angela and the Taxonista team so that way they can discuss your personal situation. I think we have time for maybe one more question, but we are coming to the end of our time here. And I just wanted to say thank you so much, Angela, for jumping on with us. There's so many, thank you. There's so many of our account holders who know you. They love working with your team. It's so refreshing to speak with tax professionals that understand small businesses, that support small businesses, that understand solo 401ks. I mean, that don't, look at you like you're crazy when you need to file a 5,500 easy or something like that. It's really, really valuable to know that there are people like you that are out there. And I know that so many of our account holders have worked with you over the years, continue to work with you. So I'll just speak for them and say, thank you so much for being here as a part of our big team that we can have as a resource to share with our account holders. And guys, if you have questions about your specific situation, if you're looking for a tax professional that can really, like Angela said, be full service, so doing bookkeeping, doing tax preparation, and really getting into the nitty-gritty details with you on your specific situation, then we would definitely recommend that you reach out to the Taxonista so that Angela and her team can see what might make sense for you guys going forward. So thank you again, Angela, for joining us today. It was awesome to have you.
Absolutely. Thank you very much, everybody.
Have a great day, everyone.
Alrighty.